rock and
Well,
roll.
bro,
So
we were just talking about. I think this would be a good conversation for people to just kind of peer in, especially for those that are used to the basic conversation IUL or whole life.
yeah, totally.
And we were just talking about how I used to be an IUL private banking gangster. Okay,
That is so funny.
I called Jake Thompson of Money Wealth Life Insurance, and I called their office picking a fight just to prove
That's
that an
awesome.
IUL was better than a permanent policy, only for me years later to be talking about permanent policy the whole life is better than the IUL.
Did you call him after to apologize?
No, I haven't conjured the energy yet. I haven't
Uh,
yeah.
oh, that's funny. That's funny. Well, and I think that's what really originally kind of connected us, right? Is the
Yeah.
conversation around the IUL stuff.
Yeah. And I think that a lot of people I think a lot of people are trying to search for the right answer.
Yeah.
They're searching for, like we talk about, short-term minded. Like you're trying to find a investment or a money vehicle that's
Mhm.
going to fix problems that you created over your lifetime. And there is no product that can fix that.
Nope. Nope, not at all. And it's hard right now, right? Like, I mean, getting into the new year here, there's a lot of stuff going on in the world that's outside of your control. There's a lot of
Yep.
uncertainty, a lot of variables that just nobody really knows. I don't care what anybody says. Nobody knows what the hell's going on. Nobody knows
Yeah.
what's going to happen.
Yeah.
And so I just like, this is why I love what we do, right? Like, I'm a big believer of like the most important feature that you need with your money is control, right?
Yes.
Like, you can control it, then you can control the results in your life. Too many people just kind of sit back and kind of play the passive role in the success of their life. And I know you and I have talked about this a little bit, but if anybody's here is watching this the first time, it's like, we know, like I call it the 4 F's of life: faith, family, fitness, and finances. Like, we can't
Hey,
outsource.
we go by that too.
You
No, we go by focus, family, finances, and faith.
Okay, fair enough.
But
Cool.
fitness is stuck in the focus part. So it's pretty
Yeah,
much the same 4 pillars.
that's amazing. So it's awesome that you say this. So let's talk about it for a second, right? So you
Yeah.
have your own version, we have our version, right? And
Yeah.
I've got this coming out in my new book. I've got a whole section of the book
Oh
dedicated.
my goodness. I can't wait to read it.
And it's like, we all know with our faith that we can't outsource our success with our relationship with God, right?
Correct.
Our pastor can't do the work for us, right? Like our spouse can't read the Bible and get right and pray and spend that time with God. They can't do it. You cannot outsource your success there.
That's right.
Family, you as a husband, me as a husband, fathers, right? Our wives, anybody, right? Like our roles as husbands, as wives, as parents, we can't outsource our success in those areas to other people, right? Like, I can't get people to be a better husband for me or be a better father. I got to do the work.
That's
Fitness, health, right? I should have called it, it was like FFHF, but I wanted the 4F. So fitness is really just health, right? Like, you got to be fit. I got to do my workouts. I got to do my push-ups. I got to do the time in the gym. I have to eat healthy. I have to be intentional about that. Nobody else is going to do it for me. So I think if we were to poll 1,000 people, 1,000 out of 1,000 would say, yeah, you're right. Those 3 things, like, it makes sense. I have to take the responsibility and massive accountability for the success in those areas of my life. Yet when it comes to finances, which is, I think, one of the core 4 pillars of success in life, and I would argue that it has a massively direct correlation to the other areas, right? Like, I mean, think about it. Marriage, what's the number 1 cause of divorce?
Money,
right? When it comes to health, fitness, right? One of the greatest causes of health issues is stress. One of the greatest causes of stress is financial stress, right?
Yeah.
If we get our money right, people don't realize, if you get your money right, man, everything else comes with it. But why is it that 95% of the people in this world somehow think it's okay to just put the success of your money, put the control of your money in the hands of some other person, some other financial instrument where you give up control until you're 59 and a half to put it in an area that is not directly in alignment with your core values and beliefs. And I'm here to tell you, like, if you're struggling with your money, if you find that you're kind of behind where you want to be, where you expect to be, if you're not living the life that you want to live, my guess is and I'm not saying it's everything, but my guess is if you spend time to get more intentional about making sure you align your money with your values and your beliefs from a core foundational perspective, you're going to start to realize all the other things. And I say it all the time. You are where you are in life because of who you are in life. And that starts with all 4 of those areas, and money's just a part of it. And if you focus on getting better with your money, what you're going to find out real quick is it's going to force you to get better in the other areas.
Yeah, I don't know if it's crazy, bro. You're like, yes, because I wrote a book, this book here, right?
Nice.
And in this
book, show me the cover. Show me the cover.
Okay. This book, it's called We Are Sick: Surviving Financial Cancer.
Okay.
And in this book, I actually scientifically and statistically prove how consumer debt is the #1 cause of death in America.
Wow, nice.
And it all correlates to financial stress, release of, these hormones that clog up your arteries, that cause these inherent, hereditary. But the hereditary is not really hereditary. It's you putting yourself in the same stress cortex, if you will, as your forefathers that came before you, which have us consistently stressing over the same thing. So everything absolutely goes down to money. But the thing when it comes down to money, it's quite strange that most of us not, and I talk to our clients all the time, I say most of us are just grown children with mustaches and makeup. Because in order for us to take care of our financial responsibility, there is an extreme accountability that must be had in order for us to actually say, you know what, I'm going to stop depending on this other person to handle my finances that I can do that what I can handle for myself. So even if you look at like the financial advisor, right? Let's call it, let's start off with the one that gets the 26, the 63, and the 6. These are all tests that any of you can study for. Anyone can actually pass if you actually care about it. So what we're saying is that I'm going to take this money and I'm going to give it to a stranger that because they have a license, I'm going to trust them to do better with my money than I can do for myself. And if you look at it all, they don't know what they're doing either. So it's like I'm giving my money to someone else for them to facilitate what I can do for myself, which is just the craziest thing to me. So when we talk about this thing called banking, infinite banking, private banking, insurance reserves, whatever you want to call it, it's literally not putting your money in a machine that's going to make you millions. It's finally taking control of your surplus capital and really having to think about what your exit strategy is going to be, or what are you going to invest that extra capital into that will ultimately be the #1 factor of you actually becoming wealthy and rich. And so when I was arguing with people when I first got started talking about this private banking concept, about the IUL and all this other stuff, it was one question that was posed to me, Chris, that sent me down a rabbit hole. The guy asked, he said, before you argue with me about if IULs are better than dividend paying whole life insurance products, can you please tell me the pricing model inside of an IUL? And I was like, it doesn't, see, the term goes up, but don't worry about those prices. Only look at the non-guaranteed, because this, all the other smoke and mirrors. But that one question, he said, stop. You're an intelligent young man and you're sounding like a fool. This is someone I thought was going to be my client, but this happened to be an insurance broker of 30 years that was actually living the life that I was like talking about, that you could be he was living the private banking life. And he said, I'm unqualified to be your client. I'm actually in the industry. I'm not going to teach you a thing. I'm just going to ask you a question. after you break down the entirety of all of, don't look at the upside of the IUL. Mm-hmm. Look at the IUL as if it can self-destruct. Mm-hmm. Then compare the destruction to a dividend-paying whole life insurance product. No bells and whistles are allowed. Only the fundamental concepts of these two types of policies. And he said, when you're done, if you can prove that the IUL is better than the dividend-paying whole life insurance policy, not only will I transfer all my book of business to be under you, I will myself become an advisor in your organization. So guess what I was doing? I was trying to recruit.
You were trying.
Listen, I am about, no, listen, I'm about to prove right now that what you're saying is incorrect. I'm about to prove right. I'm telling my upline, I got somebody 30 years in the game, got this much book of business. I'm finna close them. It's done. And my upline is like, yeah, IULs are better. So I'm asking my upline, okay, can you help me? How is it better? They don't know. So I'm like, okay, let me go to your upline. They didn't know. I'm like, okay, let me call the carrier.
None of them
They didn't know. So I'm like, okay, let me look at this thing intrinsically below it. So I asked, what's the pricing? What's the cost? Then they say variable. Okay, it's this, but it's not that. And where I begin to start to uncover is that the IUL is just a front profit machine for the dividend paying whole life insurance products. And when the carriers don't have a dividend whole life insurance product, it's a profit machine for the shareholders.
Yep.
So come here, son.
Bring him in. Teach him young.
All right, going back to your mom. So when I began to start looking at it fundamentally from the worst up, it began to be a no-brainer. Not only was I about to create a grave mistake and tell the world that the IUL was better than the permanent policy, but I was going to put so many people in a pickle that only a bad time will be able to show itself. And so that's kind of like my conversion, my road to Damascus from Saul to Paul that I had, because I just fell for the bells and the whistles of the IUL.
Yeah, I think that's what most people do. I mean, I did the same thing when I was at National Life Group when I first started in the business. And I'll never forget when I first sat down with Don Blanton, the founder of Circle of Wealth, and he goes, Chris, listen, if everything you thought to be true about IUL turned out not to be true, when would you want to know? And I go, oh, damn. Okay. And this is a guy I had a ton of respect for, like he was mentoring me. And so, for me, I went down a rabbit hole. I've shared that story a ton of times. And, like at the end of the day, here's the deal. This is one of the reasons I started the IUL challenge, which, by the way, nobody has submitted anything. Nobody's ever, nobody's ever even come close to thinking that they can do it. And some of the people that try to submit stuff.
Wait. Still, no one has.
Nobody, bro. Nobody. And by the way, it's only going to get worse. Like their window of having a chance where it was going to succeed, or anybody that had a chance, like that ship is sailing, because we're going into markets now where we have negative years, and it is what it is, right? So for everybody who's here, just if you're thinking, so somebody just asked, check this out. I'll put the comment up. He's a fan of infinite banking, but it seems like we both prefer whole life for the guaranteed aspect. Well, I'll say this, and I'll let you respond after. I think we're fans of whole life insurance for infinite banking, private banking, whatever you want to call it. I would say for the purposes of control of our money. I'm a big fan of the concept that I think people it goes back to the control concept, right?
That's right.
Of control is the number one attribute that we need with our money, and IULs don't offer the control
That's
that
right.
we need with our money, because the surrender periods at the beginning are too high. So you don't have the early liquidity that you need. From a long-term perspective, this is why I did the IUL challenge, is because like the policies are not going to perform the way that they're illustrated. And
so but Chris, but for those that don't know what the IUL challenge was or is, What was your IUL challenge?
Yeah, it's really simple. It's saying, okay, if this product offers upside potential, because let's face it, if you're going to buy an IUL over whole life insurance and get rid of the guarantees for anything, it's going to be for what they call upside potential, right? That's what they say IULs have, is upside potential and downside protection. They try to put it out there like you can't lose money in an IUL. You can, first of all. But the IUL challenge is basically.
Oh yeah, we got to talk about that after you're done.
We will. But the IUL challenge is saying, all right, guys, all you IUL people who've been selling them for 3 years and think they're the best thing in the world, like, find me somebody. Hopefully, you have a mentor or somebody you're working with that's been doing it longer than 10 years. And if you don't, then you need to figure another solution out. But the bottom line is, the IUL challenge is saying, show me an illustration or show me a policy that's in force that's 10 years old or more. Show me the original illustration. And the reason I chose 10 years is because that's the typical surrender period, right?
Got it.
Of a policy. And they don't care. They're going to perform the first couple of years, especially in a good market. And they don't care because they got the surrender charges and all that going with you. So if you decide to do anything or whatever, you're not going to have the liquidity of the money. You try to move it or 1035 it or anything of that nature.
So it's just paper growth. It's like you can't get it.
Paper growth. It's exactly. And so, which is funny because they sell it as an alternative to a 401k, and they both like are more similar in so many ways. But like, you're basically shifting the risk from the government, right? And taking that risk, and you're putting, you're giving control from the government to the insurance company. You're not really taking control.
That's right.
But the idea of the IUL challenge is saying, hey, if we just had the 10 years, and this is not arguable, this is a fact, 10 years of the greatest bull run in the history of the S&P 500 and the markets, right? If this product supposedly gives you upside potential, then every single illustration created should have exceeded the illustration created. And I said, anybody that can show me a policy that has the in-force illustration that's 10 years old, where the current in-force illustration has matched the original, doesn't even have to beat it by the percentage that the market outperformed expectations. It's just got to match the basic assumptions, the conservative assumptions on the IUL, right? It just has to match those conservative assumptions. If you just match it, I'll give you $1,000. Now,
wait. So let's clarify. Yep. This is a clarifying question. You're stating that if somebody believes in their IUL so much, find a policy that its original enforce date is 10 years ago.
Yep, 10 years from now.
To be able to bull run. Yep. And then you're saying that if someone's policy was able to meet what was supposed to be their illustration, if it met it, what it was illustrated for it to hit during the greatest bull run of American history, you will pay them $1,000 if they can prove that their policy matched their illustration.
Yep.